Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for Tuesday, September 5th, 2017, about 3:55 p.m. Central Daylight Time. So a strong up day in a number of the metals, but not all. Believe me, when you look at platinum and palladium, even though they finished the day higher, the last trades of the day were lower than this by quite a bit, actually. So the question is, what's going on? Well, we know what's going on. In the U.S., obviously, we have the situation of North Korea that we're dealing with, item number one, and that created over the weekend a rally in the metal markets, a break in the stock indices, and a rally in the currencies. In fact, the dollar did stay down, most currencies up. We have the European Central Bank monetary policy decision coming up this Thursday. We have Congress back now, and we'll see just what goes on between Congress and the president. What can we get done? We have the debt ceiling issue staring us right in the face. I can go on and on. It's one thing after the other, and believe it or not, we have a monster hurricane, not Harvey, now Irma. And Irma right now has sustained winds of 185 miles an hour. It's about to hit, in fact, it's probably in the Leeward Islands as we're talking. By the weekend, they are expecting landfall somewhere in the United States. At this point, could be southern Florida. There's an evacuation for the Keys already out of the way. Can you imagine this thing going back into the Gulf and then ripping everything apart and coming back out? It's going to create havoc, and those are two big blows. I saw a report out of Barclays just moments ago that said if it hits southern Florida, at this peak type of wind, it could be 120 billion of insured damage. Forget about the uninsured and all that. Katrina was 50 billion. So to give you an idea of the monster it could be. So everybody's watching it, and it does affect the stocks, the reinsurers, everything gets impacted. In the metal markets, I'd say this is all about North Korea, what sanctions, if any, the U.S. can get done, and don't expect an awful lot. The U.S.'s best weapon's its banking system. It can go in and say anyone doing business with North Korea in certain areas, well, they can't use the U.S. banking system. It makes life very difficult, and that is probably where you head. Russia's already said they think that the U.S. is on the wrong path, and enough with the sanctions. You either talk or you're not getting anything done. I'm not saying I agree with them in any manner. You know, the last thing you want is a nuclear North Korea, but you have it already. They've got those bombs. Now they're developing the missiles. How do you stop it short of war? It's pretty hard to have a war. If you're in Korea, Seoul, Korea, do you think you want to know that there's going to be a war? I mean, you don't know what's going to happen. And suddenly we're putting bigger warheads on all these missiles there. That was approved apparently today. I don't know. But that's why the gold is moving. The gold is scared of that, and it's moving up. Bonds, same thing, moving up. It's the safe havens. Yen, moving to the upside. You can see how the gold has now gone up about $50, and obviously you can argue this is all North Korea missile test one, then the nuclear test. So you've got this all just taking place right there, and that's part and parcel of what is moving this market to the upside. What about a correction? Well, in order to break the current pattern of higher lows and higher highs, you'd have to take out 1302.30. Until you do that, and that, by the way, is roughly $42 away, it's pretty hard to get down there. The support of the market, which is becoming good, is you're going to see this 18-day average climb over this 1302.30 tonight. Right now it's 1302.20. In a market that you're hoping will stay bullish, I think one of the keys is to get the key moving average, which is the shorter term, and I believe it's the 18-day moving average, above a last break point on the chart, so the market has a zone that if it breaks, to not violate and just slice through that. Right now, in order to get to the bigger support, you'd have to slice through that last low. That'll move higher. The market is once again over the upper Bollinger Band. And when you get somebody like me and I see that, first thing I tell my clientele is no, you don't buy over and you don't sell under Bollinger Bands. You wait for better opportunities, and if they don't come, c'est la vie. It's that simple. And you'll say why, and I'll say because of all the years I've traded, people that buy these, like if you bought up here, you bought 1332. And people say, they don't pay attention to Bollinger Bands. That's wonderful. Problem is, if you're trading futures, you got leverage. So from that point to the break low, you were suddenly out $3,000. I realize it doesn't matter, but if you're trading futures, it does. I guess if you're trading cash, it doesn't matter to you, and that's fine. I'm not being facetious. But if you're using futures, understand the leverage, and that forces you in and out. So you have to have rules that you pay attention to for that leverage. Can you deleverage it? Absolutely. Put up the cash value of the contract or something equivalent, and you start taking leverage from roughly 10% to 50 or 100%. No leverage, zero leverage. You can do that by just buying the value or buy the gold, your call. I remember the old days when we had clients with treasury bills and high rates, obviously, and they would just roll the futures and use their T-bills against it. Those days are long gone. Don't even call your broker. They'll laugh at you. Higher lows, higher highs over the Bollinger Band, and momentum 2 days in a row with the numbers over 80. So you can see right here, there's the two numbers, and I'll stand over here so you can see them. Day before, both over 80, not the day before. So the odds favor a Tuesday reversal in the market where the market will try not to embed. That's all that the odds favor. It doesn't mean it will happen. And that's because more times than not, you don't embed. End of discussion. In the gold ETF, GLD, you have an embedded reading. Now let's count. Both numbers are over 80 today. Over and over. Different ball game. Stronger market. Breaks in this market will likely get bought. The market is still over the upper Bollinger Band. Again, I'm of the opinion you never, and that's the word I want to use, you never buy over, never sell under. That's what I teach in my charting course. Does not mean you can't do it. In the GDX, the mining stocks, you've had the embedded reading, and this is what you call climbing. Riding that upper Bollinger Band. You get a day over, day under, day over. It's perfect. Market doesn't let new traders in. It just squeezes them to the upside. So every part of the gold is bullish, a little extended in some because they're over the upper Bollinger Band, but there's nothing bearish there. Silver remains overall stronger than gold. I know that's hard to believe, but think about it. Back here at the first 10 days of August, you needed 76.17 ounces of silver to buy an ounce of gold. You now need 74.94. Obviously, silver has gotten stronger than gold. You need less ounces. And on the silver, like the gold, you have how many days over 80? So let's count. Certainly today, both numbers over 80. Certainly the day before on Friday and the day before. So the silver market is embedded, which means pullbacks in the market will likely be bought until that red line closes back under 80. You had a bullish crossover back here that I know I pointed out to you. There it is. And the market has now gone up and made new highs after that. So it's meeting all the requirements of bullishness. The copper has been a bull market. It's got its embedded reading. It's had it. When the red line closes under 80, it'll be the first correction, I think, that hits the chart. It's moved very nicely here from, if you think about it, roughly the 290 level, up to 317. But that's a pretty big rally to try to buy now. That's about 8%, so you got to be a little careful of that. In the platinum market, while you managed to settle here unchanged, the last quotes of the day were lower, and the market is not embedded. And when we go to the palladium market, you lost the embedded reading. You closed down $20. You could be making a run here for the 18-day average to regroup. Would not be a surprise to me. Dollar index, pointing down in momentum, lower highs. Now, this was the last break low, 92.05. You haven't yet taken it out. So you've got a pattern here of a higher low, lower highs. Be a bit cautious on that until you see that taken out and then figure out your next game plan from there. want to remind you about the things I talk about to help you. Guide to Technical Indicators. Now, this is volume 1, and you'll see here all the different things that it talks about. We also have volume 2, that is the GAN, the Fibonacci, channel lines, how you work with all those, and how you develop them. You can get this free. They're PDFs by calling us, going to our website. You can click up here at any point, by the way, if you're watching me on YouTube, or underneath us on many websites it says, click here for Ira's free information. Do so, and we'll get this in your hands. I'm Ira Epstein. You have a great day.